Show on the road. Good morning, everybody. Welcome to the morning show here on Stock Market TV. We got a lot to discuss today, we always have a lot to discuss. When don't we have a lot to discuss? I don't know. Maybe like the day after Thanksgiving and Christmas Eve. I don't know. But most days, there's things. We got things on our mind, all right? Today's guest, Brian Lund. We're excited for that. So if you're watching on YouTube, hit that thumbs up button. If you're watching on stockmarkettv.com, maybe go over to YouTube for a second and hit that thumbs up button. If you're watching on Twitter, I don't actually know if anyone watches the show on Twitter. If you do watch the show on Twitter, tweet at me, tweet at us, and just say hi because I don't actually know who watches us there. But if you do, good morning. Hit that like button. And all right, let's start the show.
Hey now. Do people watch on Twitter?
I kind of stopped checking only because I was reading more and more about how unreliable Twitter's viewership metrics were. And I was like, I can't even believe this stuff. So I haven't checked in like a couple of months.
I believe it's called X.
I'm sorry, X.
This particular gentleman, Tucker Carlson. Am I getting that right, Strazza?
Mm-hmm.
For you TV watchers out there, he was a gentleman that used to be on basic cable, I believe, and now he is on the X. And he's getting some pretty crazy numbers, right?
Yeah, it's really cool.
So they say. I don't know.
How do they not have reliable? How do they not have reliable metrics? I don't understand.
Well, I've seen some examples of like the metrics, like different people seeing different things, right? For the same, the same stream or whatever. So they've definitely been called into question by advertisers. So I don't know. Anyway,
I believe he told the advertisers to go fuck off.
Yes, that's true.
Amazing.
Oh, Nathan watches on Twitter every morning. Excellent.
Shout out, Nathan.
Thanks, Nathan.
Imagine being the CEO of X. That poor woman.
I'm sure she's not poor.
She knew what she was doing.
Yeah. Are you kidding me? You think this is a surprise? She knows what she was signing up for. Like when I'm obnoxious and around my wife. What is she gonna be surprised? She knows who she married.
Spencer, you come on here saying how we have so much to discuss. I can't remember a news day this slow. Like nothing.
I got news for you. Hit that bumper, baby. I got some news.
Go.
Is it going? Did it click?
Record cash levels, Strazza.
Yeah.
Record cash.
Yep.
Getting an inflation adjusted post tax yield of around 1%, maybe. Right? Is that about right? Most amount of taxes coming in from money market funds ever. Is that right?
You're busting out the Federal Reserve economic data on me.
Wow, look at this guy. Morning? I did bitch at Grant. I was like, Grant, why can't you just download this data and put it on our pretty charts instead of this ugly economics crap?
You can, I believe.
No, I know. We just don't have it in the regular weekly rotation. No. He's done it before, but we're not getting it every week. I think it's worth it. These charts are so ugly. Seriously, Fred, I don't know who this Fred guy is, but like you should be ashamed of yourself. Like, Fred, get your shit together. These are disgusting, these charts. These are like Spencer Israel type charts, like with the grid lines, and then like, it's arithmetic scale. And
I don't think the point of the chart is to be pretty.
The y-axis, you can't even read it. Like, this is disgusting, Fred.
It'd be nice if you could log a chart like this. I think you should.
We can do anything we want because this is America. But Fred, somebody reach out to this gentleman and tell him that he needs to do a better job. Remember that movie Drop Dead Fred?
You know, I would love to bring this into Optima and run some rate of change on it.
We are going to do that. I want to do money market mutual funds as a percentage of total U.S. market cap.
Yep, that too.
That's pretty sexy.
Yeah, I like that.
I have a dumb question about what this chart is actually saying, though.
We all do, because we can't read the goddamn y-axis. Fred needs to get his shit together. So Spencer,
no.
Stop trolling Fred. We busted his balls enough.
No. In all seriousness, with 5%
money market funds,
but as a
cash equivalents, which are generating 4.5% or something like that these days. But these are the highest levels ever. Another $78 billion came in last week. We're now pushing $6 trillion. And if you want to throw up the next slide, you could really see there that this is broken up between retail and institutional. Shout out Todd Stone was talking about it last night, or yesterday morning, I should say. Retail up to 2.2 trillion, institutional 3.6 trillion. Monster numbers.
Are you surprised at those two numbers, at how big retail is relative to institutional?
I'm more surprised by the total number. The split between retail and institutional, I suppose it's more retail than I would have thought, I guess, to your point, right? Is that your point?
I never would have guessed that much retail is in money market.
Yeah, but institutions can do this in different ways. This is like the lazy way for institutions to do it.
Good point.
Well, there's more dry powder, if you will, on the institutional side in similar equivalent vehicles and
treasuries.
Just general, delta neutral ways to express a cash position without necessarily being in a money market mutual fund, right? Feel me?
Yes. Elon Musk.
So we know that there's more cash on the sidelines than just this, but let's just stick with the $6 trillion in cash.
Hey.
Meanwhile, and this is $6 trillion cash. What's total U.S. stock market cap? What's your guess?
I don't know.
I don't know
what it is.
Come on, guys. Come on.
It's
like 40. It's like in the 40s somewhere. Let's call it 45 for argument's sake. Let's call it 50. Whatever.
What is that like? How much is that relative to bonds?
Bonds are almost 3 times larger. It's about 130 trillion in the bond market. Yeah, it's about 130 trillion in the bond market, 45 trillion or so. Let's call it 50. Regardless, 6 trillion. So now we're talking about the highest percentage of money market funds as a total percentage of U.S. stock market assets of all time. I'd love someone to double check that math, but regardless of whether it's the largest of all time or it's close, it's not the point. When we've seen these heavy cash positions in the past, those have been tremendous buying opportunities for equities. Tremendous. And this hasn't even started to unwind. In fact, this cash number continues to get larger. So,
well, it's one of those things, though, that really shouldn't ever get smaller.
Thank you, Steve. If something is paying 4.5-5% interest, and isn't it by definition going to get larger?
No.
As the economy grows, it's going to get larger. Yeah.
As a percentage of stock market cap? No, absolutely not.
Wait,
what are you
that's
talking
not.
about?
No. I'm saying on an absolute basis.
Yeah.
Well, on an absolute basis, no, it doesn't always go up either. It went down after the stock market bottomed in 2002. It went down after the great financial crisis bottom in 2009. So no, it doesn't always go up.
I don't know but rates weren't 4.5-5% then. Right?
Okay, they were in the 80s, and there was a bunch of cash on the sidelines, and being in cash was a terrible decision, and the yields were way higher than they are now.
This just blows JC's mind because he would never consider putting money in the money market.
That's not true. First of all, this has nothing to do with me at all. This has nothing to do with, abusing people who made this decision, this terrible decision. I don't care what other people do with their money. I'm only interested in aggregate. You have people getting an after-tax, inflation-adjusted 1% on their money, maybe, in an environment that the NASDAQ's up 50%, Technology's up 60%. S&Ps are up 30%. Bitcoin's up 160% this year. And you're sitting here with your thumb up your ass getting 1% net? That sounds terrible. But I'm not here to abuse those people. I'm only here to present the mathematics behind the equation that is going to lead, or is already leading, to one of the greatest squeezes in stock market history. And all these people with their after-tax inflation-adjusted 1%, they're going to be unwinding like a mother.
Look, if you just compare it to the last 20 years, in context of that, seems pretty good. 4.5% on your cash to do nothing.
Are you not listening to my opportunity cost?
No, of course. But for people who aren't invested, this is the best that they've ever been able. So some people they've ever been able to do. If you're not invested, right, which is a separate issue. But let's say you don't have the assets for that or whatever, then this is the best you've ever done. So.
And as depressing as that sounds, it's only going to get way worse for those people, right? Because the unwind is going to be spectacular, like just an explosive unwind when that starts to turn. Woo! You want to talk about what's the catalyst that's going to take stock prices a lot higher? While people have their heads up their asses looking at the economy, why don't you just do the math on what all this cash is going to translate into? Think about it. Just this cash alone converting into the equities market is an additional 12, 13% on stock market capitalizations.
I don't know. We don't know the pace of that unwind. I'm very interested to see that unwind and how long it takes to play out. I think you're thinking maybe it's going to happen somewhat quickly. I'm not so sure.
I hope it takes forever. I hope it takes 10 years for these people to get unwound. The longer, the better. Because I'm not one of those people, and we are long risk assets. So their donations are our increase.
All right, let's check back on this table in 6 months. I'm very curious to see how it changed.
I think that I want to reiterate that it's not about.
It's hard. It's hard to get back in, man. It's hard to get back in.
Agreed. Good. So, I hope it's impossible for them. I hope they take forever. Take your time. Good.
Yeah.
Not for anybody.
I'm getting bored. Did you hear that XAI is raising $1 billion going public?
What is XAI?
Speaking of Elon Musk, it's the AI or ChatGPT thing of Twitter, I believe.
Okay. So they're raising $1 billion as a separate entity?
Yeah.
So it's like an IAC Interactive where they have like multiple properties and stuff like that. And
I guess.
That's cool. That makes sense.
They're issuing shares. Yeah. Interesting, though.
$1 billion at what valuation?
Doesn't say.
No. So that's not very helpful.
What
do you think?
Yeah.
What do you
think?
Filed yesterday? $1 billion in cash. I can't imagine that they're going to let go of that much equity. So it's got to be a pretty high valuation.
Does Twitter eventually
10 plus, Strazza? 10 plus?
Does Twitter eventually come public again, you think? Maybe.
I don't know.
Maybe it depends on. I mean, listen, Elon Musk is the richest guy in the world, so his whatever $50 billion or whatever he paid for is not really material. So it doesn't. It's not like it's a private equity company that he has to. He has a fiduciary responsibility to investors and his LPs. Like he is the LP. You know what I mean?
If
like he doesn't have that fiduciary, so you have to like remember that it's way different when you own the whole thing.
If Panera can do it,
if he just wants to unplug it and setting on fire, he can do that.
He might one day.
He might one day, right? Exactly. Right. It's not a private equity fund. This is not a hedge fund. This is not a publicly traded company. Because if it was a publicly traded company, now Elon Musk would have to answer to shareholders, and we know how that would probably
not good at that.
Not well.
No.
Look, if Panera can go private and go public, then anyone can do it, right? So companies do it
Yeah,
all
but
the
they
time.
went private through a private equity.
Yeah. I know.
So they still had fiduciary responsibilities to their investors. So it's way different. They had to go public because that was what they were mandated to do. Elon don't have to do nothing.
Have you guys tried this grok thing?
Okay, you explained it to me, I think, twice already. I feel like I wasn't listening both times. Can you explain to me again? What is this Gronk? Is it like a touchdown dance? Like, what is going on?
I don't know much about it. I haven't tried it. It's supposed to be like a good fact checker for the other AIs.
Oh yeah, that sounds cool.
Yeah,
it's the picks and the axes, right? I always like investing in the picks and the axes.
Count on Elon Musk to do something like that. Another thing this morning sounds kind of crazy. $32 billion write-off for British Tobacco. So I guess this is in connection with the Reynolds merger. How do you mess up that bad? $32 billion?
I don't know, but helium's up 30-something% this morning.
Is it really?
Helium's up 36% this morning. I know.
Have you heard?
What?
About the new crypto bull market?
Yeah, we were here pounding the table about it. So not only did I hear, I was the one yelling on the microphone, remember? Yeah, I've got like, I don't know, 4,000 helium miners spread around the world. So I'm pretty thrilled about that 35% move. JC's winning. Pizza on me today, Mary. Pizza on me.
Look at that chart. We put a post out on this one last week, and good for Louis. 10x price target.
How about that?
Already hit one of them.
Nice, nice. Let's just do a quick rundown. Dow futures up 65 points as this bull market continues. S&P 500 up 16 handles, up to almost 4,600, Mr. Strazza. That's about 35 basis points. NASDAQ 100 futures up almost 100 points, about 55 basis points. 30-year bond futures up again. Big day yesterday for Treasury bonds as that correlation between stocks and bonds not only remains in place, but keeps getting stronger. This is a big one that I want to talk about now. Gold up another 55 basis points. Silver flat. Copper up 1%. Oil down 1.5%. And the dollar down once again. Nikkei ripping up 1.5%. And yields down slightly to 4.16%. Volatility down again, back under 13. No longer a teenager for the VIX. And in the old funny money, total crypto market cap up to 1.56 trillion. And we're looking at Bitcoin flat at right around 44,000. Another 2,000 points yesterday after 2,000 points higher the day before. That's, you want to talk about follow through. Geez Louise. Ethereum 2260 flat on the day. Solana up 3.5%, up to 63. And of course, the old helium now up 37% on the day, off its highs, up but still up 37%. And Dogecoin, that is a Spencer Israel favorite, officially up to a dime. It is now worth a dime. That's a big deal. You know, big round number there. That's 2 nickels there, Spencer.
Round psychological
resistance. That's right, at a dime. And you know, for those of you who haven't, who love heads exploding, Dogecoin up to $14.6 billion in market cap. 14.6 billion.
Helium is now a top 100 token.
Yeah, again. Right. Yeah, again. I hate to break it to you, NASDAQ Poppy. Crypto's worth $1.5 trillion. That is a bigger market capitalization than silver. Some people think silver's real stuff. This is bigger than that. So, yeah, there's opportunity. And we're making a lot of money. And those following along are making a ton of money. So, NASDAQ Poppy, I love you. You're always here. Great handle, by the way. But it sounds to me like maybe you don't want to hear about it because you don't own it. Do I have that? Do I have that right? Do I have that right? because there's a lot of people here who do. And Strazza, not to make his head any bigger, he's been pounding the table.
The Avalanche looks pretty good out here too. Huh?
Dude, you know Strazza's junked up on the Avalanche when he's asking me every day about the Avalanche.
It's a good one.
All right. So listen, market's up. Very excited about today. I'm a big fan of New York City. Best city in the world. I've searched far and wide for a better city. Can't find one. Hong Kong's cool. Tokyo is sick. But best city? I'm thinking New York. New York's still the winner. I'm not being biased. I'm looking for a better one. Trust me. But New York continues to be. So I'm looking forward to that. I will see you guys down on Stone Street, 6 o'clock. Open bar starts at 4:30, is my understanding. There's going to be some people dead by the time the presentation starts.
Yeah, I don't know how that's gonna work.
Spencer Israel is going to be dancing on the bar.
What time? I don't even know what time I'm leaving.
Ugly.
I don't even know what time I'm leaving my house. I don't even know when I want to get there.
Are you going to do a Coyote Ugly dance on top of the bar, Spencer? That's what everybody wants to see.
No,
I'll come for that.
I'll be like the first one out. I'm always like the first person to leave anything. Like any party, any gathering, I'm always the first one to leave.
Yeah.
That's your thing.
That's like my thing.
Profits too early. You have to let your profits run, Spencer.
That's my thing, man. It doesn't matter who it's with. Doesn't matter where it's at. I'm pretty much usually one of the first ones out there.
Oh, you want to show up fashionably late, right? Make sure the party's already getting going, so you're not wasting your time.
Yeah, of course.
Aren't you just a bundle of joy?
Yeah, seriously, dude.
My favorite move is whenever we're going to a thing, I just turn to my wife as we get there and just say, just so you know, I'm good to leave whenever you want to leave. As we're walking in, I'm like planting the seeds to leave. You know what I mean? But no, it'll be fun. It'll be fun. I'm unsure how it'll work with JC presenting in a bar, but we'll see how it goes.
And this wasn't even my idea, for the record.
Are you having sushi for lunch?
No, we're getting pizza
for lunch.
I might do 2 lunches actually. Now that you mentioned it, I should swing by and get a little sushi.
Get a little sushi.
Yeah, I think you may have convinced me. All right, maybe I'll do that. Little first lunch, second lunch.
A lot of convincing that took. All right.
I didn't even think about it, but that's a pretty good idea. See, Strazza knows me. He knows how to get me. He knows.
I know what you like.
Right.
So it's not just helium out here absolutely cruising today. This Loca coin's up 24%. Avalanche is up almost 20%. Doge is up 16%. Pond is up 15%.
The animal spirits, my friends, the animal spirits. And you think that these people, with their cash, you think they're happy about the returns that they're seeing everywhere else?
Well, it depends.
You think they're happy that their neighbor is making so much money in the stock market?
Well, what's the overlap with people who own a money market mutual fund and people who own Dogecoin? Those are not the same people.
That's my point.
Yeah.
The people that are in the cash thinking that was a good idea when we were telling them what a terrible idea it was are seeing the returns in other assets.
No, maybe
Doge
I should have said
one of them.
I should have said not own. I should have said who are even aware of. Like,
even you're proving my point even more. They don't even know how much money they're losing out on. Like we haven't even got to that point of recognition yet. Like people are making like an astronomical amount of money elsewhere and they don't even realize it yet. Like that's how early we are.
Did you guys collect sports cards growing up?
Yes.
I didn't really
here and there.
Didn't do baseball. A lot of basketball, a lot of football. Trade them with your friends.
You have a point?
Yeah, comment in the chat about that. Wait. Okay, yeah. So, but regarding sentiment though, so right now, at least from what I've seen, anything
still crap.
All the commentary about crypto doing what it's doing has been confined to the business sections and the business publications and the crypto news outlets, and it hasn't saturated through to the mainstream yet. When I go on the front page of the New York Times website or on CNN.com or wherever pick your mainstream. USA Today is actually probably the best example. When Bitcoin is on the front page of that, then we've reached saturation. But I haven't seen it yet. Not that I look every day.
I want to address the comment by Billy Cunningham. Most people in cash would never buy what we're trading. They are too old and the risk doesn't make sense. That's actually a very flawed thesis. That's actually very incorrect. Most people in cash are too old. That is just wrong. We have the data where 4 trillion of that is institutional money. So by definition, not old people.
It could still be
actually professional money managers with benchmarks. What could still be what?
It could still be. It could still be institutional investments on behalf of old people.
No. These are institutional investors. They're not old people too old to be trading things. No, that is incorrect. That is money that is being mispositioned because these institutions are slaves to sell-side research and the strategists that take them out to steak dinners and Knicks games and strip clubs, and they do what the strategists tell them instead of actually doing the work themselves and allocating assets in risk assets during bull markets as opposed to risk off assets like cash. It's a mispositioning. It's not like, aha, screw you, you're in cash and we're making all this money. No. It's not what it's about. It's about, look how much cash there is on the sidelines that continues to increase as the bull market progresses. And to Spencer's point, they don't even, some of these cash, they don't even realize how much money they're losing out on yet.
Whoever said, was it Chris in the chat? Google Trends. Forget what I said about CNN, USA Today. Forget that. Google Trends, that's what you want to watch. You want to watch the Google Trend data for any crypto, Bitcoin related search. And he's right. I do look at that somewhat often, and it's still low.
Yeah, Bitcoin might not be an option for them, but the technology index, these are the largest companies on planet Earth, which are an options for these institutions. Literally the largest companies on Earth are up 60% off their lows. It's not about Bitcoin. Yep. It's not about high risk tech growth. These are literally the largest components of the largest indexes on planet Earth. Those are the options that they have that they are not taking to sit in cash instead. Wait till these people start getting their tax bills on their cash. That's going to be hilarious.
Is there a secular tailwind for certain financial assets just based on maybe technology? A lot of times people would call it demographics, but like that aside, right? Sure, as the population changes and more young people have more and more money, maybe more and more old people who would never touch crypto, maybe there's a secular tailwind there. But is there one just from technology, like the ease of buying these things, the convenience of buying these things? As technology gets into the hands of more people in more countries, do they start accessing certain markets more than others? Is there anything there?
Maybe a really long trend. Jack talking about how I have to understand that retirees don't have working income. They don't want to risk money for their daily needs. That's not who we're talking about, Jack. Are you not listening? This is not who we're talking about. If you're an old person that wants to sit in cash, great. But you're a tiny segment of this cash. The people that are being squeezed are not those people. It's the segment. It's the part of the 6 trillion in cash that should have been allocated elsewhere, not grandmas.
Well, hold on, though. That chart showed that retail was higher than you thought. The retail flows
as a percentage. It is higher than I thought as a percentage.
Okay, so
so take all the retail out. You still have 4 trillion. Let's say 100% of the retail is old people that can't invest in stocks. Let's just say, which we know is not true. Okay, fine. Okay. You still have record numbers.
Yeah. All right. Brian Lund will be joining us in a second. In the meantime, can we talk about like a stock or something? Something real?
Yeah. By the way, I just double checked. And yes, assuming you back out the entire retail portion of that cash, you're still at a record high. Just FYI.
Did you guys know that Bitcoin mining used more water than New York City last year?
No.
Fun fact.
All right. Big big beginner of the day right now for me is Sentinel One, ticker S, up 18% on their
Woo.
earnings report. I don't actually know what about this report is so spectacular, other than that.
What is this company? I thought it was Sprint.
It used to be.
No, come
They got
on.
fired, huh?
I love how you know your. I love how you know your one-letter tickers.
That was like 5 years ago.
It was like 5 years ago.
What is Sentinel One though? Seriously, is that cable?
Cybersecurity, I think. Yeah, and so their EPS beat. They're still a small company. Actually, I guess they're not. They're $7-8 billion, but EPS beat, sales beat, guidance came in above estimates for the quarter and for the whole fiscal year. So hence the 17% increase in the pre-market this morning.
Wow.
For this guy. So, and then on the other side of the coin, we have Asana down 15%. Likewise on their report, frankly. Although I'm not so sure what's so bad about this.
It's still in a range. It's an underperformer. So price leads news. Makes sense. Price has been struggling relative to its competitors, and now bad news comes out.
Yeah,
standard.
By the completed basis.
I mean, if you just look at the headlines, you would say these headlines are not bad. So, but again, you're right. Underperformer. Stock moves in direction of the trend. The numbers themselves, though, were not awful. Is sort of my point on Asana. So there we go. Big gainer of the day, big loser of the day. There are others, but those are kind of the headlines for me as far as
really not much though.
No,
not
well,
even much.
like when looking at pre-market gainers and losers, you have to look at volume too, because you might see a stock down 8% on like 100 shares, and it's like that's might as well not have traded, right? So, in terms of stocks with heavy volume, there really isn't a lot. That's why I kind of talked about those two. But in any case, let's move on from that. Let's bring on Brian Lund and talk about whatever he wants to talk about.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
BC Lund in the house.
How you doing?
You know how we're doing, Brian. You know. How are you doing?
I'll tell you how I'm doing. I looked this up, so I know it's a fact. The market has rallied 21% since my first appearance on your show. So I feel like a BC Lund appearance is bullish for the market.
No arguments here. Nobody said it was bearish. Right. That means, JC, since we started our show, because Brian Lund was on like the first week.
Yeah.
The show sparked a bull market in stocks, right? It's 20% of bull market.
The bull market had already started. We know this.
The bull market started. Any side of the argument you can't take, JC?
The bull market started 18 months ago.
An answer for everything.
You're so literal.
18 months ago, the bull market started. People are telling me it's a bear market. How do you feel about that, Brian? Why don't we start there?
So Mark Minervi says that we're not even starting into
What's a Minervi? Who?
He's one of the market
wizards.
Maybe I said his name wrong, right?
Minervini. Yeah.
Minervini, sorry.
Minervini, yeah.
So he's one of the guys that says that we're not even starting the bull market yet. We haven't even we're just getting going. So
I would agree with that.
For some stocks, look at some of these ARKy stocks or the ARK indexes themselves. Reversals just completing now.
We're not even making all-time highs yet.
Yeah, so we're in this really interesting stage right now where people are talking about, like, are we going to start getting rotation, or are we going to get everything firing at once? And so I think it's a big question for a lot of people, because there are some stocks that haven't really moved on this big run up in the last 18 months. So the question is, have they not moved because they're dogs, and if the market pulls back, they're going to tank, or are they just the second stage of stocks that are going to get going? And I don't think we know yet.
I would rather it be rotation.
Yeah, I hope it is. Well, I mean, I'd like it to be everything firing on. Like last week, we saw IWM breakout, right? But we didn't see that same move in the Qs or the SPX. And so the SPX Qs are consolidating. IWM consolidated yesterday, maybe today. I mean, we're getting to the Goldilocks point where if everything gets in line, we could see all four indexes run into the end of the year. I'm not saying that's going to happen, but it's not out of the question. It doesn't have to be rotation. There's a lot of money on the sidelines.
Spencer, can we throw up slide 2? Yes, there's actually a lot of money on the sidelines. The most ever, Brian, for those keeping score at home.
NASDAQ all-time highs by year end, Brian?
But hold on. I want to talk about Brian's question because it's a very good question. Shout out, Brian Lund. Very good question. Do we get everything firing on all cylinders or do we get rotation? I think this chart points to the rotation aspect because when you're looking at S&P and the NASDAQ back up to those former highs, is the bet that we want to make that this is just going to rip right through there? I mean, I suppose it could. I think the easier bet is in areas that still have upside rather than buying things. Not necessarily that I trade the S&P or the NASDAQ. I don't really, rarely ever. So I'm not doing this, but I'm thinking about the composition of what's inside of the NASDAQ and the S&P 500 and just the sheer outperformance we've seen out of that. And the rotation started almost a month ago. Small caps on a relative basis bottomed on November the 10th. Do I have that right? Check my math. November the 10th. That was almost a month ago. So we've already started to see this rotation into small caps. Now small caps are making new multi-month highs relative to large caps. You're also seeing the equally weighted S&P 500 making new multi-month highs relative to the cap-weighted S&P. So it's already gotten going underneath the surface. So to answer your question, and granted, I don't have a crystal ball. I don't have the answer. My guess and my bet is that the rotation continues into other areas. You're seeing financials, healthcare, industrials, big winners, huge winners. Small caps, mid caps.
Yeah, I think conventional wisdom, just putting the analysis aside, I think conventional wisdom would be the NASDAQ has gotten so, I wouldn't say ahead of itself, but I mean, it's ripped this year compared to IWM. So naturally, you would think that big institutions would want to maybe lock in some of their gains, reallocate some of that money to things they think are undervalued. What I think the average retail trader, and that's who I'm always talking to, right? I'm talking to the guy like me who's trying to figure out how to make money. What they have to be aware of is that if that starts to happen, here's what we're going to see. We're going to see this call, especially from the financial media. Like, so let's say big cap tech starts selling off and small cap starts taking off. All you're going to hear is the market is tanking. It's a bad market, right? Because they're just going to focus on your Metas and your Googles and your Apples. And we know that there can be multiple markets going on at the same time. So, I would just tell the average retail trader out there, don't get hypnotized by those financial headlines. Look for the stocks that are moving no matter whether they're big cap, small cap. As Brian Shannon says, only price pays. And that's the thing you got to pay attention to.
I mean,
listen, actually be more up. Yeah.
I was going to say, we've seen monster winners in small caps. Like, it's not that small caps haven't been performing. Maybe your small caps haven't been performing. Maybe an index of the Russell 2000 hasn't been performing. Small cap industrials are up 35%. Small cap technology up huge. Small cap discretionary up 26, 27%. These are monster winners. So
right, but let's take a look at certain areas. Like, for example, biotechs. They're just starting to look like maybe they've bottomed, right? Yep. So that's a whole area that you could say, well, they haven't moved, and maybe there's a potential for them to move. So I'm saying there are specific areas that, let's say you're into solar stocks, whatever. There's big groups that haven't done anything or haven't done much during this rally that could be where we see the next action.
Everybody's talking about biotechs.
Who's everybody?
Everybody's talking about biotechs.
Who? Me, Stone and Brian Lund?
We had somebody on last week, I forget who it was, talking about biotechs. Now Brian Lund's mentioning the biotechs. Everybody's talking about biotechs. I was on Twitter Spaces. People were talking about biotechs to me. I don't know.
Well, if you look at XBI, it does look to me like it may have put in a bottom. I mean, so if that's the case, then you're going to start. Look, I'm a trader, but I also look at the macro too, right? Like, I want to know what state the market's in at any given point and what state any sector is in. And so if you look at that, you say, well, there's a potential that maybe and you see if that pattern starts showing up in other biotechs as well. I happen to have a couple on my list that I'm looking at. So some that look really good is ACLX and AMPH. Those are ones that have been pretty strong. Ones that I think may have bottomed, and I'm going to keep my eye on, Halo, CRISPR, CRSP.
Hey now. You triggered him.
JC likes that one.
Oh, do you?
JC likes that one.
High and tight. Look at this thing. Nice.
By the way, Brian, do you think it's a coincidence that biotechs are getting going at the same levels that they've always gotten going every time they've ever been at these prices?
A lot of charts look like that too.
It's almost like price has memory, JC. It's weird.
Dude, almost, man, almost. I got to give a presentation at a bar tonight in New York City. How should I really stick it to him? Should I stick it to him or should I take it easy on him?
You know, you should tell him. Here's what you should tell him. You should say that what was it 6 months ago that this show started? Is that correct?
Mm-hmm.
April. Yeah. So I was on the first week, and I went back and looked at it. You know what we were talking about on that week? You know what the big issue was that week that everyone's worried about the market? The debt ceiling, right? So remind them how what they think is super important today is going to be irrelevant tomorrow, and that they should just pay attention to price.
You know, Brian, I honestly, bro, I think that they've run out of like scary headlines, and they're just recycling old ones from prior cycles. Like, didn't we do this debt ceiling like 10 years ago? And the government shutdown was another one. You know, the taper and then the sequester, right? Are they bringing those back too?
Well, that's one of the things that you and I have a benefit, Steve, too. Like, once you've been around for a couple of cycles, you realize that it just all repeats, right? And so that makes you a lot less likely to buy into it. We all have a negativity bias. That's just a human condition. But we've seen, the debt ceilings happened 25 times in the last 40 years. I mean, just think about the stupid things that people paid attention to. Remember people paying attention to balloons? Remember we were seeing balloons that were coming?
Balloons, that was a good one. How about the debt downgrade?
Well, hold on.
Good one. Think America's debt downgrade after the bond market crash, for the record, not before.
Think about this year, though. It's so important to take a step back, right? Now that we have more perspective on these things that happened in Q1, Q2 of this year. A ton of scary headlines all year, one after the next. From the bank failures, right, that we started the year with. We got wars, Chinese air balloons, whatever it might be.
Wars are not bearish. Wars are historically bullish. So that one doesn't really count.
Beside the point, completely beside the point. The point I'm trying to make is been climbing this wall of worry and just ignoring these negative, scary headlines all year long.
Yeah. Or look at the action in oil, right? What has oil done in the last few months as we've had increased tensions in Ukraine, Russia, as we had this whole thing in Gaza and Israel, right? You think if anything's going to drive oil up, that would drive, but it's not, right? So the idea that you can divine price action from news headlines, I don't know. It's a very spurious concept, I think.
Yeah, for me, it just gets back to something that you know very, very well, and obviously us too, and we use that to our advantage, is that we know for a fact that asset prices trend. We know. We have the data. It's also common sense, but if you're not into common sense, we do have the data, plenty of white papers, the whole thing. Asset prices trend. They are not random. So if we know that, then shouldn't we just spend all our time looking for trends? I mean, am I wrong?
I think there's a tendency to overcomplicate things. People do this in all aspects of their life. They do it in raising kids, right? They overcomplicate raising kids. You know this, JC, right? Like, kids are complex, but there's some things that like are just very basic on how you raise them. You know, like I saw, for example, I was down at we were walking down in Newport the other day, and there was a young couple, had a little kid. Kid was throwing a fit. They were sitting there having a little negotiation. Now, would you like to do this? And why don't we do that? And I'm like, dude, it's not that simple. Just tell them, get off the ground. Get going. Come on. I mean, it's so simple.
Little kids like that, they're like investors. Like, they don't think rationally, you know? They're very emotional, very erratic behaviors. You know, it's true.
But think about that. So you're having an adult who's experienced 40 years of life that's being dictated to by a 3-year-old who doesn't, the brain will even fully form until they're 25, right? And you can see that.
Is that what it is? Is that true?
It's 20. It's like the medulla or whatever the part here does not fully form until you're 25. So. I'm sure that's the wrong term I'm using. Someone's, I'm sure, yelling at the screen, but it's something right here in the first.
Abdullah Ambangola or something like that.
Yeah, that's why they say it's bad for kids to smoke pot, because their brain hasn't fully functioned. So, speaking of pot,
speaking of pot,
give us the pot update,
dude. Seriously, everywhere you walk around New York City used to always smell like pot, but like it would come from like the alleys and like the corners. Like now it's just like everywhere. There's like a couple of cops and like a couple of dudes ripping blunts, like just chit-chatting with them. Like,
no, there's not.
It's wild.
There's not cops smoking weed in New York City.
No. The cops are not smoking weed.
Okay.
The people are standing next to the cops. No. The cops are not smoking weed.
They
probably are, but I haven't seen them.
Yeah. Here's what I don't get. I was fully for legalization. I don't smoke pot, but I was for the legalization of pot. But here's the deal. I don't understand. You can't walk down the street drinking a fifth of gin, but you can walk down the street smoking pot. It doesn't make any sense to me. I don't get it.
I think you could do that in Florida. I think you could walk around. I think you can do anything you want in Florida.
Or Vegas. You can do whatever you want.
Or Vegas, yeah. Yep. Are we buying pot stocks? What are you thinking here?
Well, so we watched while MSOS based for like 2 weeks, 3 weeks, then it broke out and it failed, which is what pot stocks do. Look, I'm of the opinion that if pot is going to ever become a bullish asset again, you'll have plenty of time to get into it, and you'll see some consistent constructive patterns, not just these 1, 2, 3 day things. But like I have a feeling, I know this is this is contrary right here, but I feel like it could be a dead asset. Like I feel like it could be commoditized. These companies that are in that space just seem like they are so lame. I don't know. I don't know if it will ever be something that people make money off of.
That's the bottom. No.
Right?
No, I'm with you. I mean, who knows? Who knows?
We know what it is, JC. As soon as they close down the pot ETF, right? We use the coal example all the time, right? As soon as MSOS goes out, then we start buying with both hands.
What do they even have in assets?
Who knows?
It's actually 450 million. It's not nothing. And then what's the other one?
YOLO.
MJ, I think.
MJ is another one.
MJ's got 200. MJ's got 200. And does YOLO still exist? YOLO's got nothing. YOLO's got zero.
I think that one is being delisted.
YOLO doesn't have any money in it. MSOS is the one with the most, 450. And then the MJ has 200. So what is that, 650 million?
It's nothing.
Nothing. $650 million? That's literally nothing.
Yeah.
Wow. So even if they all do go to zero, nobody who matters, will care.
I think I've said this for a long time. I think a lot of them are just going to be stuck in this cycle of reverse splits, shelf offerings, diluting. I mean, they've already done. I mean, I think ACB is like reverse split 15-1 like 3 times already. It's just ridiculous. The dilution there is Aurora, I think is what it is. I'm not sure.
Yeah.
I can't remember now.
Another thing I wanted to mention is that, a good lesson that I learned early on in my career, shout out Luis Yamada, shout out Alan Shaw, was that the bigger the drop, the longer the need for repair, right? And just a couple of classic examples. Look at Japan after the late 80s. We're still not back. Look at the technology collapse after the 2000 top. Look how long it took for that to repair. The great financial crisis. We're still at those levels. You know what I mean? Like, particularly on a relative basis, financials relative haven't done anything. So that whole bigger the drop, longer the need for repair, I learned a long time ago, and we continue to see again and again and again. You see it in ARC, right? Massive collapse, long need for repair. I don't want to exclude pot stocks from that. The bigger the collapse, and I can't think of a bigger collapse, the longer the need for repair, right?
It's a great point, because as bad as the drawdowns were in these ARCy growth stocks a few years ago, I mean, you just don't see this, like these drawdowns in cannabis. And across the board, right? So it's like every single name in the group, 95% drawdown. Even the index, like you look at the group itself, the index is down like 90%. So that's very rare.
And let's remember, let's get back to supply and demand. It is literally a weed, right?
That's the best part.
The amount of sheer supply of this commodity just cannot get anywhere near the demand. And you could buy ounces and ounces of the funkiest greens for a couple of $100 like in the black market. Like, these companies are never going to make any money.
Yeah. The only ARC stock that's comparable to the implosion in pot is NVTA. It's a Kathy Wood favorite that I think has lost 99% of its value.
Nice.
I mean,
wow. I can't believe they still own this.
She's been buying it. She keeps I have no idea what's going on there.
60 cents there.
Can we talk about this move in Robinhood? Hello. You want to talk about a catch-up trade?
Yeah. Well, isn't that all a crypto thing, though? Isn't it that they have crypto? They're holding a ton of crypto. Isn't that what that is?
He was on CNBC this morning. I don't like this. I don't like the Vlad Tenev.
They both. I met them both. I'm sure they're great guys. They struck me as arrogant from day one, but whatever.
Well, you met him in San Diego?
Yeah, it's Stucktoberfest.
They struck you as arrogant? They actually seemed like nice guys to me then. No? Maybe I miscalculated. I don't think I was talking. I think I was talking to the lower level cats.
Yeah. It could be me. Well, who knows? But in terms of them, like I think it is a crypto story.
I don't just being an asshole, and they didn't like you.
Who I was being an asshole?
No, I'm just kidding.
That's totally possible. That is 100% possible.
Throw slide 2 up there. Here you go. Here's your crypto. And for those people who want to talk about real assets, we could calculate the market capitalizations of this. Coinbase, fun fact, up to 33.5 billion. MicroStrategies up to 9 billion.
What about that Sailor story, right? He's got like.
Spencer, can you throw this up, please?
He's got like billions of unrealized profits, supposedly.
2.3, 2.6, something like that.
Something like that, yeah.
How funny did you see?
Put it in there again, JC. The slide didn't load. The chart didn't load. Put it up again.
It didn't load. I'm looking at it. It's now slide 2 and 3.
Did you guys hear the news out of El Salvador? Even El Salvador's making money on Bitcoin.
It's El Salvador.
Yeah, that one. In the black. The president is very happy.
So the old, what we like to say around here, whether it's true or not, but we all came to a consensus, is that MicroStrategy is a bet on Bitcoin. It's the de facto Bitcoin ETF. For all these people sitting on the sidelines waiting for an ETF, you got one. $9 billion in assets, fun fact. And then Coinbase is a bet on crypto.
Yeah.
Which is why you're playing catch up now, and MicroStrategies had already been leading because Bitcoin was the first one to get going. So it's making sense, that theory. Do you agree with that theory? How do you feel about that?
I think a Coinbase to me has always been a bet on Brian Armstrong. I think he's a potential Zuckerberg, type guy. So that's how I've always felt about
it's
Coinbase.
Such an Eddie Elfenbein comment, right? Eddie likes to bet on good management, good CEOs, or bet against them, right? So, that's a very Elfenbein.
Yeah, I mean, Elon Musk, you bet on Musk. There are people that you can bet. Now, when I say bet, I mean you're not trading based on that, but like if you're a long-term investor, and that's what
not a bad tailwind is what you're saying.
Yeah, exactly, 100%.
Yeah,
love Brian Armstrong.
Yeah, hard not to, right? Like, how do you hate on that guy?
He's one of the best CEOs.
So we just talked about the guys at Robinhood again. Who knows what? But that's the contrast there, right? I look at one of the guys and he seems very balanced, very The other guys seem like I don't know.
What a difference!
Grifters.
Listen to them both talk. What a difference! Yeah.
Well, you can see it in the price of their stock, right? One's making new multi-year highs, one is not.
Listen, the miners still not really performing the way you'd think. See some of these moves out of crypto.
Marathon doubled in a month. What do you mean?
Yeah, we talked about that, right? The halvening, Steve, right? Isn't that the thing
doubled in a month?
Back?
Yeah. It's all about the halvening apparently. And I know, JC, like, look, they're up, but they're just not as up as much as some other crypto assets.
The halving, it makes sense to me because literally, mathematically, there's half the amount of daily supply coming into the market from crypto miners, literally. So how good is that? I don't know, but it's definitely not a bad thing for there to be less supply, right?
Yeah. How are your helium miners doing, JC?
Pretty good, man. I have thousands of them all over the world. I'm an investor in a fund that's got a ton, and
where can you track helium? Like they dropped it from so many places. Where do you find the data on that?
Like the mining or the
price? Yeah.
TradingView.
TradingView has it?
Of course.
Okay. I think they took it off Binance, and that's a really low bar. Really low bar.
Yeah. That's saying it nicely.
When they started, didn't they have a shoe at one point you could walk, and as you walked, you would
they still mine? Do, but you get more. You earn more when you're running, though.
Of course they do.
You earn more when you're running.
That was the peak. That was the top.
Right.
Listen, just because Strazza doesn't like to go running, because he likes to walk to get his croquetas,
I say that a miner where when you're drinking, it mines you coins. That would be I get that one.
I'd be surprised if that didn't already exist. Or maybe like an exercise.
There's a
bike.
browser.
Can you imagine if you had like an exercise bike?
Yeah, that's an incentive, right? You get on the what was that, the Nordic track, and the more you run, the more helium you get. That'd be great.
We saw some crazy stuff in 2020 and 2021. I think we go back to that kind of a place, and the shit we're gonna see in the next few years, it's gonna make 2020 and 2021 us hanging out in the metaverse all gonna look like.
Here's a good one, Brian. This is a good one for you. Got a few more gray hairs than I do. You've seen some shit. Right, you have seen some shit. So when people are like, "Oh, JC, do you think the Dow gets to 50,000 next year?" I'm like, "Well, that's not specifically the bet I'm making, but let's say that does happen. That wouldn't even be like in the top 10 craziest shit we've seen. Like that would be kind of interesting, but not even that crazy, right?"
Yeah, if you, I know we're all probably Morgan Housel fans here, and he has this piece where he wrote that, like, once in a lifetime things happen all the time, and it's true. And you're right. Once you've been around for a while, like I'm an optimist, but I'm a little bit of a cynic, right? So I tend to be like, And I've learned that, like, the biggest skill I've learned in the last 10, 15 years is to not count out anything, right? Never say no to anything. At least be open to the possibility, especially if price is leading that way.
Yes. Before we run, it's December the 6th. We got a few more weeks left in the year. A lot of portfolio managers haven't been able to keep up with their benchmarks. A lot of underperformance. Some last-ditch efforts here to do some catch-up. Anything you see that might be able to squeeze into year-end because portfolio managers got caught off sides?
I think we have to get past. So we had this window here between Fed meetings, right? Which I think gave the market a cover to run a little bit. I think we have the next one on the 12th, something like that. I think we get past that. If we get past that without any big bombshells, I think it's game on into the end of the year.
Yeah, it's next week. Yeah, wow.
All right,
and they're off.
And there's our opening bell. So on that note, we'll let Brian run. Go straight, Brian.
Go YOLO responsibly, Brian.
Bye, Brian.
We will talk to you in the new year.
Adios.
If you can believe it, we'll talk to Brian next year.
Wow. Talk to you next year.
Next year. Hey, time flies when you're having fun. This year already over.
Man, it is pounding snow. How about that?
What?
It's pounding snow outside.
Is it really?
Yeah. Not where you live. Not in Florida.
No, not here. All right.
Yeah.
Shoot.
Yeah, it's snowing.
You guys are traveling today.
Travel's a strong word. Spencer is crossing a bridge, maybe even a tunnel. I don't know.
No, I mean, my window shades are closed, but yeah, it does say it's snowing outside. I'll be damned.
Spencer does not like crossing rivers. Not a fan.
A lot of green on my screen.
What's that fear? What's that fear of crossing rivers? You know how like arachnophobia is like a fear of spiders? What's Spencer's fear of rivers?
I don't have a fear of rivers.
I think
or
you
bridges
might.
or tunnels.
You guys?
No, I'm in the city like once a month. Anyway, moving on. Markets.
Gephiophobia. Gephiophobia. It's an anxiety disorder of crossing bridges and tunnels.
Did you guys play Oregon Trail when you were younger?
Gephiophobia. That's what Spencer has.
How would you cross the river in Oregon Trail?
Yeah.
They tried to get me to do that once. It was boring. I didn't do it.
Okay.
Yeah.
All right. So yeah, I'm seeing a lot of green too, Strazza.
Why don't we do a little rundown here?
With some red sprinkled in, but mostly green.
Dow futures up 150 points, which represents about 40 basis points. Spencer likes percentage gains. So 150 points on the Dow, 20 handles on the S&P, again, about 50 basis points. NASDAQ 100 futures up almost 100 points, about 60 bips. 30-year bond futures up again, 40 basis points. Gold up 60 bips. Silver flat. Copper up 40 bips. Oil down 2% today. And dollar down, VIX down, yields down to 1.4, 1.14.
Let's talk about energy. I mean,
for sure.
Tough to own it right now. No,
well, it depends where in energy. Uranium stocks, coal stocks, absolutely ripping. It's the oil.
I know, but oil and gas.
Specifically the explorers and the producers. Those are the ones that have been struggling.
But even, it's hasn't been, listen, you've been unhappy if you've owned any of these oil and gas stocks since September at this point.
Yep. They're moving with the dollar.
You know what else, JC? I think rates is really
100%. 100%. So we're in an environment where inflation is the problem, right? Quote unquote. Maybe not the problem, but inflation is the regime.
Yep.
And in a market environment where inflation is the regime, stocks and bonds are moving together inversely to energy, traditional oil and gas, which is inflationary. So when stocks and bonds are moving lower, you're getting that bid in energy. When stocks and bonds are moving higher, you're getting that sell-off in energy with rates. Yeah. That's the correlation.
I think some of the other stocks that traditionally do better when rates are higher now, like financials, though, I think do better with them lower, right? That's a little bit different than we're used to. Don't you think?
It's a different regime. We're seeing correlations that are very, very different than what we've seen over the last couple of decades. And what I will tell you is that investors are having a hard time wrapping their heads around it, because they're not like you and me that'll just see it, do the math, and be like, oh, okay.
Yeah.
They trade together now. Like, okay, we're over here now. Like, for us, it's that simple. We don't have to go crazy trying to find out why. There must be some reason. And if not, and if I can't figure it out, it must be manipulation, right? All that. Like, you and I don't care. So for us, it's just, oh, okay, so this is how it is now, right? But for a lot of investors, it's not that simple. And it's taking them a long time to wrap their heads around it. Most of them still have not. And I think the worst investors that are going to be penalized the most for being so slow are going to take the longest, right? So kind of observe that behavior. And I know a lot of us know really, really bad investors, like some of the worst investors on the planet. Watch them and see how long it takes them to wrap their heads around this.
For energy, I think, you don't want to write these stocks off here, but you also don't want to see some of these tops start completing.
Dude, the XLE still hasn't even broken out yet. I mean, that's the one. For me, it's that simple. You watch the XLE. If and when it breaks out, and by the way, I think it ultimately does. We've been bumping up against this level for 15 years. Speaking of, the bigger the collapse, the longer the need for repair. That energy collapse after 08 is still being repaired, right?
You're right.
So if you're wondering, when does energy get going from an oil and gas perspective? Because coal and uranium continue to rip and lead this market. Despite the lack of participation from oil and gas. Just watch the XLE. You want to keep it simple. Remember we had a keep yourself out of trouble level in treasury bonds. We looked at the IEF, which was the benchmark ETF for 7 to 10 year yields, and 100 was that level. You want to stay out of trouble in the bond market, just avoid bonds altogether from the long side anyway if you're below 100 on that ETF. Remember? And that kept us out of trouble.
Yeah,
I would argue that you can make the exact same strategy and energy on the XLE. If the XLE is below the 2008 highs, that'll keep you out of trouble.
So XLE 2008 highs, $90.
Is that the number?
$90.
All right.
10% below there already today.
Yeah, $90. What's that?
Reminds me of gold, kind of. And you got to be patient. Gold bouncing back here today, though. I know you're happy.
It's not about making me happy or not happy. I find the action in gold to be constructive. I don't overthink Sunday night futures, because you know what I used to do when I was a lot younger, Mr. Strazza? I used to overthink the Sunday night futures. I used to live and die by late night futures, and I quickly learned that futures are not a great indication of the future. Had to learn that one the hard way, but boy, has it served me good. So when people are flipping out at night, looking at futures, I'm like, let them dance. Let them dance.
Sometimes cryptos are a good indication of the future.
Cryptos are a good indication of the present.
You knew the stock market was going to be up today if you were looking at your crypto watch lists overnight.
I mean, I guess, I suppose.
Yes. Yeah.
All right. But you could also just look at the futures market. No?
You just said it's not a good indication of the future. You know.
Yeah, but the crypto is the present.
At what time were you looking up crypto prices?
2 o'clock in the morning.
Probably maybe 3:30, 4 a.m.
Dude. What
it's not
the
Perlman program.
I keep waking
what
up.
Are you gonna do when this stuff actually starts going like beyond breakout into like parabolic mode?
I'm gonna be very happy.
You're gonna not sleep.
I mean, gonna be eating a lot of croquetas.
This I'm gonna be eating more than croquetas. This candle in helium makes me happy.
Speaking of bougie, Strazza just discovered his love for caviar. That's not a cheap habit.
No, it's not. It's a place we go though. There's a place we go downtown on right near Duval though. They have the best happy hour, 50% off caviar every day for happy hour. That's pretty cool.
So it's only like a couple $100.
You're probably looking at $50.
Oh, okay.
After the discount.
I don't know. I've had caviar once in my life. It was good, but didn't see the hype. Anyway, do we have anything on Hot Corner today?
Yes,
I'll be honest,
I
didn't look at today's email yet.
Buddy.
We did.
You hear this Verizon commercial? They literally saying that they're giving away an iPhone, an iPad, and an iWatch. How could they do that? You guys know that? You know what I'm talking about?
I didn't see that, but I did see. I did right. Me too, JC. But I did see that Verizon's doing a thing where they're bundling. What was it like? Bundling Disney Plus and HBO, something like that. They're like bundling a couple of different streamers onto their service, which is
I don't understand
cable all over again.
I don't understand their business. Yeah. It seems like they're always giving stuff away. I know they just want to get you under contract, but
didn't they buy Yahoo?
Huh?
Didn't they buy Yahoo?
Yeah.
Yes.
What are they doing with
they
that?
did. I don't think they still own it though. I don't think maybe they do still own it. Yeah, I think they do still own it.
They shouldn't make any more acquisitions.
Verizon is a $160 billion company, by the way. So.
T-Mobile is bigger.
T-Mobile is bigger.
Didn't see that one.
Didn't T-Mobile, but that's because they bought Sprint. So
still bigger.
Anyway, Hot Corner.
Hit it.
Yeah.
What do we got? Yeah.
Hot Corner. So hot right now.
I'm interested in the director of Verve, Krishna Yeshwant.
Big one. Big one. Big one.
Yep. $18 million. Not a Piker purchase.
Sounds like a private placement, though, right? See a round number like that. That might be a private placement.
$1 billion company. Fine, whatever.
I know.
So Mr. Krishna or Mr. Yeshwant over here is locked in because of private placement. Great. Even more bullish, you'd think, right?
No, can't help but notice some of the fellas in the chat talking about the Baker Bros this morning. See that?
What did the bros do? Did they do anything?
MDGL is one that they were active in recently, and it's been having a good couple of weeks here. So today, what stands out to me is really this Verve, like you said, JC, more than anything. Heartland Express, also interesting. That's a trucker, 1.1 billion, kind of small. Doesn't look as good as some of the other truckers. But if you zoom out on that chart, like running into a big support line, goes back like 20 years. We've seen the stock bottom here before. So interesting to see an executive coming out. Julie Durr. 600,000 is not nothing.
600,000 for what? It was $1 billion market cap?
Yeah. 1.1.
Yeah, I mean, look, I've got the chart right here. Here, throw up this chart. Slide 2. This is Heartland Express. So this is a trucker. 1.1. It's just $1 billion in market cap. from Iowa. Shout out Iowa. It is an interesting level of support.
And this is what you see, right? The executives come out and they buy weakness. They buy, in this case, 15-year lows, and you're getting a rebound right off of this pretty well-tested level of support. So I don't hate this one. I also think, JC, these are the kinds of stocks that it would behoove us to start looking at and thinking about buying more. I know they have been the leaders, but it's groups like this, right? Truckers, perfect. I'm into it.
For sure. Blake's asking about what's going on with Rolls-Royce. What's going on with Rolls-Royce is that they're an aerospace and defense stock. They do a lot of engine work and stuff like that. And aerospace and defense is breaking out to new highs. This thing's been working for a long time, by the way, Rolls-Royce.
Wow. I didn't even know it was a stock.
Rolls-Royce? Yeah, it's not like luxury vehicles.
It doesn't trade in the U.S., but
it trades on the U.S. It's $30 billion in market cap. It trades 3 million shares a day.
Pink sheets, though, right?
Yeah, I should have clarified. It doesn't trade on exchange, is what I meant. Yeah,
but it's an aerospace and defense stock. I think that's the answer you're looking for, Blake.
I did not know that.
Because they make some cars and stuff like that, but that's almost like by accident. Like they do like big engine stuff. Yeah, they're an industrial.
So materials and industrials and financials leading the way out here today. What do you think about that, JC? Is that in line with some of those ratio charts and relationships?
Materials?
We've been talking about materials, industrials, financials.
Rotation, rotation, rotation. It's the lifeblood of a bull market. If we weren't seeing rotation, that would not be characteristic of a bull market, right?
Are you bullish?
Rotation. Okay. This chart's already a few days old, but yeah.
Are you bullish the value factor into next year?
Didn't the S&P Core Value Index Fund just close at a new all-time high?
Yeah, so that's ISUV. We do have the chart. I think Hans could probably throw that
There's
up.
A lot of market cap, by the way. A lot more than you'd think. ISUV is 13 billion in market cap, something like that.
It annoys me that some of these values.
Not ISUV. It's not ISUV. It's
ISUV.
No, it's not.
I get annoyed that some of these value indexes look very different than other value indexes. Yeah?
It's not ISUV.
IUSV.
IUSV. Yes. IUSV. That's it. 13 billion in assets. That's a lot.
Well, it's core iShares. Fund, so
a lot of these factor funds approaching those old highs.
Yeah, but look at the y-axis though. You want to get me excited about 73 to $80, right?
In an index?
I love
a value index, Spencer? Yeah, that's a lot.
Spencer does such a nice job at bringing this perspective. I don't think you're wrong one bit to think that way. That's absolutely the right way to think. He's basically looking at this chart and saying, boy, I could have bought something else that's up 50, 100% over that time frame.
Yeah, sure. That's not the point.
I played the breakout in sugar earlier this year. It's like watching paint dry. Yeah, it was breaking out, but it put me to sleep.
Well, basically, you're making the point that before making a trade or an investment, you should always ask yourself, what am I going to get paid if I'm right? Right? It's part of the risk-reward equation, obviously, but also importantly, what am I likely to make? What are other assets likely doing over that time frame? And then what does that opportunity cost look like? No? Shouldn't we always be thinking that way before we hit the buy button on something?
And the answer is going to be different for everybody. For me, I'm more interested in sort of the aggregate behavior of human beings.
I know. JC just wants the information. I know. JC just wants the information.
What? Tell me.
You don't disagree with what I'm saying. I'm talking about if you're making an investment, you got to be thinking that way. What's the profit potential?
For sure. But now let's also remember that most investors don't think rationally, right? They think emotionally. And it's up to us to take advantage of that. So like when you're seeing like all this money flowing into cash in the middle of a bull market. You're like, but that doesn't make any sense. Why would these fools do that? Well, they're not thinking rationally. And then by the time that all that money starts leaving those funds, we will be selling them our stocks, right? That's how the cycle works.
What will be the worst stocks of 2024?
Wow. The worst stocks of 2024,
You could pick a sector, you could pick an industry group. You can't say cannabis, though.
No, probably like consumer staples.
That's a bull market answer.
Yeah, it's a bull market answer. Right, that's what I'm doing. Staples.
I think energy is a wild card.
Energy is a wild card. Yep. Energy could be a bad performer if the stock market rips. Yep, that's right. I think staples is probably the safer bet because it's not going to go, if the market, we're in a bull market through next year, it's not going to go straight up. So during those corrections in equities, you're going to get, like, for example, we rip into January, which is kind of the path that we've kind of set. If that's what happens in February, like in late January, I want to be accumulating oil and gas stocks. Like, I already, we'll worry about it when the time comes. But thinking through a few steps from now, I could see us buying aggressively energy for that February correction in equities, and you get a rally in the dollar, in yields, and in energy together.
Does the dollar and interest rates, or do the dollar and interest rates continue to fall next year?
If the stock market plans on going higher, yes. Yeah, I think it needs to. There's no evidence that suggests that the stock market's going to go up with the dollar.
Billy in the chat here makes an interesting point, or interesting comment. Worst 2024 will be what was the best in 2023. It's easy to think that way, but it's almost never that way. And the reason is simple. It's because just like markets or financial assets trend, these relative relationships trend also.
Yeah.
So we see it all the time. I'm thinking of the sector performance matrix that Grant put together, right, with all the different boxes, and you tend to see the same ones, kind of repeating, or up at the top or down at the bottom.
Particularly quarters at a time.
Yeah. And it's a trend thing, right?
Yeah, Billy, it doesn't no, it's not.
It was a joke. But still.
It was a joke, but just to reiterate, but it's a good point to make, right? It's a good point to make to reiterate that it doesn't necessarily work that way. It's more of a function of the environment that we're in. And if we're in the early stages of a bull market, and we still have another year to go, and election years tend to be great for stocks, so it would make perfect sense. Then leaders should lead, and the types of stocks that tend to underperform in bull markets would likely underperform. And those are low volatility stocks. Those are consumer staple stocks. Like, that would make sense. Now, I hate to, talk about what a whole year is going to look like. Who the hell knows, right? I like to think more of like next quarter than the next quarter, like the next 90, 120 days is sort of where I like to live. That's why I'm talking about January and February and sort of the progression, right?
I was reading something yesterday that was making the point about how most investors don't use long-term thinking. And I thought to myself, interesting, because if I use short-term thinking and am constantly trying to make money or position myself best in the short term, and I'm just doing that over and over and over and over and over again, isn't that the best form of long-term thinking? Don't you get to a better place performance-wise with short-term thinking?
You mean these, like, what are those, like, funds that are like target dated funds? Like,
I'm not bullish.
No.
Like,
what? Don't knock on target date funds.
They're stupid. What do you mean don't knock them?
They're not for you. They're not for you.
It doesn't matter whether they're for me or not. They're stupid.
They're terrible.
They're terrible.
So basically,
funds.
Why buy a stock today that you think over the long term is going to be good if it's not working today?
Yeah, I know.
Right? Just buy the ones that are working now.
Because it's cheap, because it's on sale.
It's cheap for a reason.
It's a flawed way of thinking. It's
terrible. It's only for people that are bad at math.
Well, momentum is a real thing.
Right? Trends in asset prices is a real thing. So if you're buying all the biggest pieces of shit, like that's never going to work for you.
Yeah.
That's not how markets act. Can we do a little? Can we do a little homies before recess?
Did Toll go boom?
Toll went boom.
Yeah.
Toll went boom.
Nice.
And to Billy's comment about the worst of this year being the best of next year, well, it kind of worked this year compared to last year, right? Tech was the worst last year, and it's the best this year. So anyway,
I said we should buy that coil in Toll Brothers last week.
You did say that.
I did buy it. Oh,
good for you.
I
just want to talk about one of the reasons that we were gun shy in July, expecting corrections in equities, not just because of seasonality, was because were running into their former highs, semis were running into their former highs, industrials were running into their former highs, tech was running into the former highs. Remember that quad chart? Well, tech's already above, semis are above, homies are above, and industrials are right there. So what had us spooked in July is now resolving higher. So
how good does XHB look? I typically use the ITB, but XHB really clean, super clean.
XHB is cleaner. That's why I was using it in those examples.
So the best stocks, the best indexes continue to make more and more new highs. We continue to see more and more indexes making new highs, joining the all-time high club with stuff like NVIDIA, Microsoft.
And then XHB, which is the S&P Homebuilders ETF, is the reason it looks different than ITB is because it's everything that's not homebuilders. Right. So like ITB, for example, is the home construction ETF. It literally has home construction stocks. Right. So DHI, Lennar, NVR, Pulte. Right. The other one, the biggest components are Williams Sonoma, Masco, Floor and Decor, Floor and Decor. Right. They have other stuff.
I like the look of Home Depot right now. I really do.
Oh, if you like home builders,
big old base.
What? It's hard to hate home.
I'll give you one.
It's hard to hate Home Depot if the homies are ripping to new all-time highs, right?
Yeah.
Right. I'll give you one in the space that looks awful. Lumber Liquidators.
Forever.
Yeah. Forever, right? What does that company even do?
I thought it was LL.
It is LL. It is. It still is. It wasn't.
They changed their name. These jabronis, they changed their name because they're so embarrassed that they're so bad.
No, but it's a meme stock now.
See this sometimes.
No, it's
a meme stock.
It may have been for a brief moment, but it's not. I don't think
it's a penny stock now.
It's $100 million stock. Really,
penny stock.
Below my line.
Yeah, seriously, Spencer, come on.
Lumber
Liquidators, get out of here.
It used to be back in the day. All right.
All right, so for second lunch today, I'm going to Prince Street Pizza. It's going to be very exciting for me. Went to Lombardi's last time I was in the city, or was that the last time in the city? Or a couple of times ago that I was in the city. Went to Lombardi's, first pizza place in these United States of America, and didn't disappoint. Very good, Lombardi's. So good.
What's the best?
It's been a minute since I was there.
What's the best New York City pizza?
I mean, it's a very personal decision. I who consider myself a very bougie pizza connoisseur, can't even tell you. I mean, it could be L&B Spumoni Gardens is really good. Totono's really good. John's on Bleecker, really good. Much different. John's on Bleecker is going to be night and day compared to, say, Prince Street Pizza, where you're getting more of like a grandma slice, like grandma meets Sicilian slice situation. It's not like a true Sicilian. It's like a little thinner, but it's not a true grandma. It's kind of like somewhere in the middle.
I got a hot pizza take. You're going to hate it. Pizza is better in the boroughs, not in Manhattan.
I'm not going to fight you on that.
Well, where's Joe's? Joe's is in Brooklyn, right?
Which Joe's?
Joe Stonecrab.
The one
Miami.
Joe and Pat's, that's Staten Island.
No. No. What's the one under the bridge?
Grimaldi's.
In Dumbo. What's that one?
Grimaldi's.
For Grimaldi's. Thank you.
It's a good
Grimaldi's.
one.
Yeah.
Yeah, that's a good one.
Yeah.
DeFara's doesn't exist anymore. The old man that used to slice the basil. They're not around no more. Connecticut is like another borough, right? They got great pizza there, right? Jersey's like another borough. Steve, Jersey's got great pizza.
Steve, it's like asking what's the best key lime pie in Key West. It's like, does it really matter? Like, it's all good, right?
The pizza's gonna be good.
Doesn't matter.
You know what? When I ask Koreans, right? We have Korean friends, and we ask them, "Where's the best Korean food?" They say, "Just go to K-Town, walk down the block, and find the one with the shortest line, and just go to that one."
That's all good.
Yeah.
Multiple Koreans whose opinions I respect have told me that, and I have listened and done that, and I have been happy afterwards. So, thank you, Sam Rowe. Thank you, Tom Lee. Two of my favorite Koreans.
All right, so you're excited. You guys are all hanging out tonight. You'll be eating pizza. You'll probably be eating sushi. Maybe you do a lunch. I hope you do.
I think I'm gonna do double lunch.
Good. Let me know how it is. And then you're doing a presentation. Double fisting old fashions. No? One old fashioned?
I'm doing legs tomorrow.
Okay. Right. That's right. Okay.
I got a leg workout tomorrow. So I'm trying not to kill myself tonight because I'm gonna die tomorrow. Well, doing legs after open bar presentation. It's an aggressive move. I didn't think it through.
Is there gonna be snow in the city? Now I'm getting really jealous. Is there gonna be snow?
Yeah, I'm gonna go look outside right now
because I
want to see if it's snowing.
As long as it's not rain. I don't want rain.
Did Spencer just walk away?
Spencer just walked away.
No, I have no snow where I am. I'm a little bit east of JC. So I'm basically right between JC and the
light
city.
slow. It's a light, wet snow. Nothing's sticking. It's not cold enough.
Okay.
All right. Yeah.
Very good.
Cool. All right. Yeah, we're good. All right, guys. So it's Wednesday. So we got the hot corner with Strazza at 1:00. Know what the fic today? Ian is out doing meditating in like the mountains of Oregon. So he'll be back next week. But we got hot corner with Strazza at 1:00. So thank you to our guest, Brian Lund. Thanks to all you for hanging out, whether you're watching on YouTube, on X, or on our beautiful website, stockmarkettv.com. We appreciate you. Hit the thumbs up for me. Hit the like button, please, and thank you. It helps us out in the eyes of YouTube, and that's what we got. Go make some money, all right?
Adios.
See you, everybody.
I can't take no loss. I don't even know what it